Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Tuesday, July the 24th, 2012. Well, a continuation of the trend to the downside today. A candle has made a lower high and a lower low. The candle we're analysing is the second last one here. The final candle there is actually still developing, so we can't analyse that at the moment. But for today's trading, we've seen the market take out the low of the previous candle. The previous candle was a doji type candle. Did suggest that there was potential for a change of trend, but the market failed to rally above the high of the previous candle and establish a higher high and a higher low. And we have seen the sellers come back into this market. Previous day's trading, the sellers lost some commitment, but today a very large black body candle denotes the sellers making solid net bearish progress, and they've closed with control of this market. The market did attempt to rally towards that high and found the previous support area around 21.55 to now hold as resistance, and that will be a significant area for this market if it is going to rally. 121.55 will be very, very important. If we look here previously, we had some type of a flag type pattern, not perfect with these boundaries. The bottom of these boundaries is good, the top is not so good, but it is a flag type pattern, a congestion area. We had to break out down below. Here's the prior trend, and with flags it's normally the measured move, the extent of the trend leading into the pattern projected down, so that would give us a target down below this 118.76 level of support. So there is a possibility that the market could trade down to those levels. In terms of the Fibonacci extension, and we're examining the relationship in Fibonacci terms of the current downtrend that the market's into the prior time the market was trending down, and here we've seen the market find support at the 50% level, and that could be significant. The market tested just below there and closed right at that level at 120.58, and we haven't seen the market test down there yet with the current candle that's developing. So there is potential for a change of trend, but certainly not shown in the short-term dynamics with the sellers being in control. If the market does test lower, we should look to the 61.8% at 119.96 for potentially strong support, and then down to the 78.6 and the 100%, but more important is this 61.8% level down around 119.96. In terms of the Fibonacci retracement, and now we're looking at an expansion past the 100% level, and we're looking at the relationship of the current downtrend to the prior uptrend that the market was in, and we saw the market test to the 100% level, take out that level for the previous day's trading, test exactly to the 161.8% level at 120.61, and find buying coming in, set the market up for that potential change of trend. And this highlights very well how we shouldn't just trade these Fibonacci ratios in isolation. We should always look for confirmation. So even though we saw the sellers lose commitment around that level, we didn't see a change of trend, and confirmation would have been a candle with a higher high and a higher low. The same holds for today's trading as well. We've seen the market close just at that level, or slightly just below, and price rejection from below there, so it does set it up as an important level, but we do want to see the market change trend with a higher high and a higher low if we are going to see this market rally. In terms of Ichimoku, we have a very bearish market here in all three time frames. The market's trading below the cloud, so it's bearish in the long-term time frame, trading below the Kijun Sen, so bearish in the medium term, and below the Tenkan Sen, so trading below, bearish in the short-term time frame, and the Chikou span is below the corresponding price action, so it's confirming the negativity that we're seeing in this market overall. In terms of where this market goes to from here, even though we have that confluence of support from the Fibonacci ratios and the extension and the retracements, we're not seeing any buying coming in at the moment. The sellers have once again taken control of this market, and there's no major support other than those Fibonacci levels until we trade down to 118.76, so we could potentially see the market testing down to those levels. To the upside, if the market does rally, 121.55 is important resistance, previous support area. So let's watch the low of the current candle. We are trading fairly close to there, so if we test down below there in a bearish way, we could see the market extend down past there, but also the high becomes important in the 121.55 area.